Yeah, so post lunch session, I was expecting a smaller crowd, and that's what is here. But I'm here to present coal, a slightly dirty topic, but I'm happy to present. I've been in coal sector for past 8 years now, so I thought not a bad forum to talk about what's happening in coal. I have some short-term slides to start with. So what happened in 2018 first? So my first focus is thermal coal, and I'll look at what's been happening with the demand supply in the area of thermal coal, and then I'll talk about coking coal as well. In 2018, it was a peak year in terms of seaborne supply. Before this, 2013, we saw 950 million tons of thermal coal in the seaborne market. Last year, it was closer to 980 million tons, which is definitely a peak in terms of seaborne supply. But if you look at the supply, mostly it actually came from Indonesia, most of the increase. And there was some decline from some of the smaller countries, but South Africa especially, there was a decline, and even rest of the world supply declined last year. But there was increase from Australia. Colombia, because of weather-related events, there was a decline in supply. But I think the most important part is the quality change last year. So even the South African supply went lower in terms of energy. And even if you look at Indonesian supply, what we saw last year was that the increase in supply last year from Indonesia was mostly low energy coals or sub-bituminous coals. And if you look at the bituminous exports from Indonesia, they actually declined. So overall, what we can say is definitely the tonnage increased last year, but in terms of energy content, probably the supply was same. Important part, which is the climate change and how it's impacting the coal consumption in various countries. So I think the key ones to talk about right now is China and India, and what they are focusing right now is controlling pollution rather than controlling carbon emissions. So just to make clear, there is difference between pollution and carbon emissions. And when I say pollution, it's mostly because of particulate matters or SOx and NOx emissions. So the pollution that is visible to your eyes is caused because of these three parameters, whereas carbon emissions are more carbon dioxide and carbon monoxide emissions, which may result in climate change in the future. So these are the GHG gases. And so in terms of non-GHG emission norms, so a lot of countries have gone stricter. So especially China and India, where there was a lot of pollution in Beijing for so many years. Whether you talk about India, Delhi has been facing a lot of pollution. So what they have done is they have defined new norms for emission for SOx, NOx, and particulate matters. And if you look at these stringent norms, they are actually even better than the current European Union norms or US norms, sitting for SOx and NOx emissions. So why is this focus? Because there has been a lot of hue and cry around pollution in China and India, and they're trying to reduce, trying to support people and reduce pollution. But if you look at particulate matters, which are probably more important in terms of pollution, Indian coal is very high on ash. And ash is the reason that there are more particulate matters flowing in the air. And higher the ash, higher the emissions in terms of particulate matters. Even the washed coal in India is quite high, whereas their limit is quite low actually here. So for them to reduce this emissions, they have to actually blend more with imported coal so as to bring it lower than their emission standards. But currently, there is not much penalty on emissions in India, and hence plants are still not following these standards. But for sure, in the future, they have to blend more with imported coal so as to reduce the ash content and reduce the emissions. In terms of China, domestic coal is washed coal is still decent in terms of ash content, and their standards also match. But again, if you look at Australian coals and Indonesian coal, which are very low on ash, if Indian coals are blend with these coals, Indonesian coals, it actually helps in limiting their emissions. So there would be a growing demand for blending with Indian domestic coal to reduce emissions in the future. So that's short term, but again, leading to long term. So in terms of long term demand dynamics, I think The key ones to look out for are India and Southeast Asia. These are the only, well, India as a country and Southeast Asia as a region are the only two areas where there is growing demand for thermal coal. And these are the few countries which are going to increase the seaborne demand as well. So talking about China, so this blue portion represents Chinese seaborne thermal coal demand. We have seen Chinese thermal coal consumption to peak in 2013, and we expect the Chinese thermal coal consumption to go down in the future as they move towards more greener fuels. And their seaborne demand will actually decline slowly, but we still expect 100 million ton odd dependence on seaborne coal. Again, most of it is for the coastal plants, which will find it economical to use seaborne coal rather than their domestic coal because they are located way too far off. In terms of growth, India is the key growth market. Again, there's a mix of various segments here, but when we talk about India's coal power generation or coal demand, thermal coal demand in power sector, we make this clear that we in our forecast for fuel mix in India, we expect India to meet its COP21 targets. So whether it be 30% of their installed capacity by 2030 to be coming from renewables, or whether it be their reduction in emission intensity, we expect them to meet all those targets, even exceed them. But still, there would be increasing reliance on coal because India doesn't have any gas domestically and gas still remains expensive. Southeast Asia, Japan, Korea, Taiwan, we expect a decline. Focus, especially in Korea, has been towards renewables. The green part is Southeast Asia, so there is an increasing demand from Vietnam, a little bit from Malaysia as well. TNB has been looking at thermal coal. And Thailand, one or two plants as well. So this portion is Southeast Asia supporting some of the thermal seaborne demand, and rest of the world is definitely declining. So there are European countries looking at completely moving away from coal by 2030s, and we expect them to do so. But their reliance will go more up on gas until unless battery storage kicks in for renewables. So, but the problem is on the supply side. So as you can see from this hall, there's hardly any interest in coal. So what we understand is there's not much investment going into coal sector. And thermal coal is definitely a bigger issue because nobody is willing to invest in thermal coal these days, especially greenfield projects. And what has been happening on top of that is that there have been rulings against new mine development, especially one case is Vickery in Australia, where out of 5 points, one of the points was that the project is being rejected on its potential impact on climate. So that has sort of set a precedent, and it might be used against other mine approvals in the future. And what it means for thermal coal supply from Australia first, and then we'll talk about global as well. So in terms of Australian thermal coal supply, which is considered the good quality coals, we see that there is big risk to a number of projects. So this is the coal profile coming out of New South Wales, which is the largest coal projects in the coal port in the world. And if you look at their the operating mines profile, it's depleting sharply over the next 7 or 8 years actually. And if you look at the requirement from the projects, it's huge. It's about 39 million tons per annum by 2025. If these are not replaced, they will not be able to maintain their potential supply into the market. And this is the best quality coal available. And if it's not coming, then definitely it will put pressure on the prices of this coal. And if you look at different project profiles, a lot of projects in pipeline. And if Vickery sets a precedent and other projects doesn't get approved, all these projects, there is a huge push down on the tonnage coming out of New South Wales in Australia. Beyond that, that was just Australia. But if you look at the supply-demand dynamics, right? If you just consider the operating and highly probable projects, which have got approvals and everything is in place, the financial investment decision has been taken. The outside of those projects, if you look at our demand profile that we have shown, there is a deficit coming from 2024-25 onwards, which is huge. And our demand profile is not bullish at all on thermal coal. We have a very slow demand profile for thermal coal, seaborne thermal coal. But if you look at the supply, there's hardly any supply coming in. And what that means for price is definitely that the prices will remain strong. So if you look at our 6,000 benchmark coal price It's coming down right now, but we expect it to remain stable at high 70s level and go up beyond that, because once there is need for more projects to kick in, the incentive price will pick up the price for thermal coal in the future. And the thermal coal prices remain strong after that. And if you look at our demand supply profile again, the base case demand is definitely high. And if you look at risks projects, after considering risk, the operating mines, they'll be producing very low, lesser amount of coal in the future. So that will impact the demand supply balance. So yeah, it's definitely no investments going into thermal coal space. There's still demand, and there would be need for more projects in the future. From where they'll come will depend on the the availability of funds for them. Quickly on met coal, again looking at short term first, there has been a significant increase in demand from India last year, and we are expecting again next 2 years an additional 8 million tons of coking coal demand coming from India. In terms of Southeast Asia, that's another important region that is increasing its coking coal demand. So we have been talking about nickel, pig iron, getting used to produce stainless steel by Tsingshan in Indonesia. So that has been one of the low cost producers. They are looking at a carbon steel project this year. So Tsingshan is starting a 3.5 million ton crude steel capacity in Indonesia. At the same time, in Vietnam, Haufat and Formosa are looking to expand their production capacities. So what that would mean is higher demand for coking coal as well as iron ore. So there is definitely support coming from Southeast Asia for metallurgical coal. And if you look at the demand profile from the country perspective, again, India is the big chunk, which is gray, increasing year on year. There is a lot of crude steel production increase in India. But beyond that, there is Southeast Asia and even Brazil increasing its steel production, which will lead to more demand for coking coal. In terms of supply, there's hardly any addition to supply. If you look at outside of Australia, there are only 2 mines, one Teck's Elkview coal mine in Canada and one Russian coal mine, which is supplying some hard coking coal. But beyond that, it's only Australia, which is increasing a bit. But if you look at some of the depletion, so there is depletion also happening at the same time. So the reserves are depleting at North Goonyella and Millennium. Millennium is going to shut down this year. North Goonyella is fire-related issue, and the mine is still shut down. But there are definitely some increase happening elsewhere. But the important part is when you look at metallurgical coal, there are different segments in that. So you have premium quality hard coking coals or hard coking coals. You have semi-hard or semi-soft coking coals, and then you have PCIs. So in terms of hard coking coal, there is hardly any supply. And if you look at their prices, they have remained strong this year as well as last year. So their prices have been in the range of $200, where the cost of production is only about $80, $90 a ton on an average. So you are making a margin of more than $100 a ton on your coking coals. And we expect that to remain strong this year because there's hardly any supply coming in, but there's still a strong demand. If you look at semi-soft, we expect some softening because the demand is there, but still a lot of projects are coming online this year, next year, which will support that supply. And same story for PCI. But over the long term, I think again the key portion is again India and Southeast Asia. So coal, I think the story is only Asia. So in terms of India increasing its coking coal demands, it's huge because government has a big target. We don't expect them to reach that target in terms of steel production capacities, but still the achievement that we have for India in terms of steel capacity, they'll still be demanding a lot of coking coal. Rest, there is a huge chunk coming from Southeast Asia as well, a big chunk. And then Chinese dependence on coking coal will increase slightly as well because Chinese domestic coking coal is deteriorating in quality. So especially in Shanxi province, Lulin number 4, which is low sulfur coking coals have started to reduce. And the Lulin number 9, which is high sulfur coking coals are increasing. So they have to continue to rely on strong CSR, low sulfur coking coals from Australia. So that's where their reliance will go up. In terms of supply, Australia is the natural beneficiary. Most of the coking coals are in Australia. Interestingly, USA will go down because of the trade wars. US is producing more steel domestically, so they will require more coking coal for their domestic steel mills rather than exporting it. Beyond that, Russia definitely benefits. Long term, they also face depletion. There is some support from Canada in the short term, but again, long term, they are facing reserve depletion as well. So Teck is increasing some of its production, but not beyond next 5 years. And then there is some coking coal coming from Central Kalimantan in Indonesia, especially Adaro's Adaromet project. So based on our long-term forecast for demand and supply, we have this green line as our price forecast for metallurgical coal. The blue one was our previous forecast. We haven't changed it a lot, but what you can say is 2018 is actual prices and 2019 is what we are expecting now, slightly higher. And we expect it to remain high till 2024 in the ballpark figure of about $130, $140 a ton. Beyond that, there is need for more projects, which will push up the prices slightly up, because when we model our long-term prices, we look at what's happening in the incentive prices of different projects and how it will impact the prices for the met coal. But just from the investment point of view, right, we have our investment community here. What's been happening with the mergers and acquisitions and deals in coal industry? So if you look at the left-hand side chart is for metallurgical coal, and the right-hand side chart is for thermal coal. And the blue lines, blue dots are the prices across different time period, and so same here. The gray ones are the deals which have happened. The size of the bubble represents the deal size. And if you look at the implied prices for M&A acquisition in met coal space, in 2018, the average implied price for a particular deal was about $128 for hard coking coal. And if you look at thermal coal deals which happened in 2018, the average deal implied price was $75 a ton. What that means is that for a ton of reserve of hard coking coal, the acquirer paid $128 for hard coking coal and $75 for thermal coal. And what it would mean is that their expectation for long-term prices for these two coals is basically in that ballpark range, which is interesting. And the important part is that there were still 20 deals done in 2018, which shows you that there's still interest in coal sector. It's not dead completely. The other one is when we look at M&A or investment strategy, we look at buy versus build. So the previous one that you saw was around whether you should buy a project, or this one talks about whether you should build a project. So in terms of buying projects, you have seen what price they are paying. But when you look at the build profile for the new projects in coal space, what you will notice is that at $128, which was the hard coking coal implied price for buying a mine, at that price actually you can build a lot of greenfield projects or even brownfield expansions. And at implied price for thermal coal, at $75 a ton, you'll see only a handful of projects actually become financially viable. So interestingly, well, instead of buying a new coal mine or buying an existing mine, there's definitely, in terms of financial viability, there are a lot of projects which are available to invest at that price, but there are risks. And when you talk about coal and investment in greenfield projects, there are lots of risks around that. And this comes from our sister company, which is Maplecroft, and they look at ground risks. The important part is, if you look at regulatory framework across Asia Pacific, it's on a scale of 1 to 10. And as you go down, the risk increases. So if you look at regulatory framework, it's really poor in the areas where there's most of the development happening in the mining space. If you look at the resource nationalizations, it's increasing. There's higher risk in Central Asia and Russia, but if you look at Indonesia, for example, they're looking at nationalizing some of the resources. So whether you talk about Freeport, McMoran, or potentially other deals where PT Nalum took over a lot of assets. So definitely these are the risks that you see now happening more often than previously. And other than that, there have been risks around climate change, of course. And when we talk about climate change, the first example comes into our mind is Carmichael. It's probably not, the colors are not so viable here, but it has been a big controversial project. There have been a lot of questions around what's happening with the project. It started in 2010 when Adani acquired the project from Link Energy, and it's not gone anywhere. And the latest struggle is around black-throated finch. They have faced setbacks because of yucca, skink, and ornamental snake earlier, and now it's around black-throated finch. So the Queensland government rejected their management plan for black-throated finch, probably more because of political issues. There are elections in a few months' time, and they want to take their time on that. So they have been changing strategy, but if you look at their demand profile or also the project profile for years, right, it's just been a mess. So let's see whether it will save the light of the day, but definitely a lot of issues around that. So whether you talk about regulatory risks, government risks, or climate risks, there are a lot of risks on projects now. The other example, which is Rocky Hill, which I was talking about earlier. So the New South Wales government, the court actually said that these projects, outside of their visual amenity and social impacts, is also rejected because of its prospective GHG emissions. So this is the first time globally that a coal project, and that to a met coal project, was rejected on its carbon emissions. And it still has not been used as precedent in rejection of other projects, but there is a big chance that a lot of environmental bodies will try to restrict new development of coal projects, whether it's a met coal project or a thermal coal project, quoting this as a precedent. So we have to have an eye on this as well. So a lot of risks around development of new projects, which will hamper the coal growth and which potentially can keep coal prices high in the short to medium or even long term. The last point that I wanted to highlight is the IMO impact. So we all know that 2020 is the time period when International Maritime Organization have asked all the entire shipping fleet to move towards low sulfur fuel oils or marine gas oil. What that would mean is that we have a separate downstream team in our company, and they look at the mix and how that will impact the costs. The important part is, I think, on the mining side, it's not a big issue as such in terms of costs. It's more towards hauling and transportation or even the freight costs. So in Australia, because you don't have a lot of barges hauling your coal, whereas in Indonesia, you do have barges hauling your coal out. So there would be slight increase in cost there. But I think the important part is the freight cost delivered into China. So if you look at this chart, I think it's slightly complicated. I tried to make it more complicated, but it's probably slightly easier to understand now. But what I'm trying to show is that if you are Adaro Tutupan, which is a big coal mine in Indonesia, if your base cost is this, because of diesel prices, your cost will increase to this. So about 44.5 to roughly about $49. But if you compare that to delivered into China from an Australian mine, which is owned by BHP, Mount Arthur, and if you try to look at their cost delivered into China, they probably Australia will end up benefiting from IMO regulations. So the benefit is not huge. It's just $1 to $1.50 a ton, which potentially can, well, Adaro Tutupan can probably reduce their prices to cover that up. But so what I can summarize from this slide is because of IMO regulation, there is increase in cost, but it will not potentially impact the coal industry as such in a large way. It's more about freight availability or vessels availability, because if some of the vessels are penalized for not using low sulfur fuel oil, and if they are not available, the freight cost might go up. That might put pressure on coal prices, but overall, there's not potentially a huge impact on coal prices that we are expecting. So that's all I had. This is my profile. If you have any questions, happy to take it.
Well, thank you very much for that race through the world of coal there. Do we have any questions from the audience? I was going to ask a question about, if all of these projects, these new projects, are stopped on environmental grounds, does that mean that in the future you're going to see power generating plants using lower quality coals from other locations, which might have a more adverse effect on the environment than if they were using Australian high quality coal?
Yeah, that's the defense used by Glencore now in their project approvals. So they just filed it a month back, saying that if it's not us, then it would be probably Indonesia. where the sustainability is a question, and the lower energy content of the coal might lead to more carbon emissions. But yeah, so there are questions raised like that, and there have been projects approved on that ground in Australia before. So we have to wait and watch how the Glencore projects, which is United Bamboo, gets approval on what basis. If it gets rejected again, then it's a different story. So yeah, it's a wait and watch now.
I mean, you mentioned that there's this one coal project in Australia that was rejected for its potential future emissions.
Yeah, Rocky Hill, yeah.
Has that been tried anywhere else? Are you seeing that happen in other countries, where the people are maybe using that as the reason to reject projects, or
Not yet.
not yet?
This is the first one.
When was that? When did that happen?
2 months back.
Oh, really?
Yeah.
It's a very new thing.
Yeah, it's a new thing.
But would you expect that to happen in other countries now?
Not sure. What we have learned is that it has already been quoted by some companies in US, I think, some of the cases, but not sure if it can be utilized everywhere. There were other issues with that project. Definitely, it was just 3 kilometers away from township. So those were the main concerns, but this condition was added as a fifth one, outside of 4 important ones. So not sure how it will end up being used by different companies. But if you look at Glencore Defense, they are talking about it was a very project specific. And again, the concern is that if they don't produce, it will get produced somewhere else in a more, you can say, not so environmentally friendly manner, and might actually end up increasing the emissions much more than what potentially a mine in Australia might do.
I mean, you've painted quite a sort of bleak picture, I guess, for the future of the coal industry, which many people would consider to be a good thing, I guess. But as for investors, if they were looking at this sector, you'd probably tell them to only invest in already existing coal projects that are fully approved and permitted, who can benefit from a rising thermal price.
Well, the interesting part is if you are willing to take risks, there might be some projects which might give you very high return because of just that reason. So there are greenfield projects, for instance, Carmichael, right? But if you look at, there's a mine called Springshaw Creek in Australia, which has good prospects. They have existing infrastructure and stuff. If you invest in that, you can expect a higher return. But basically, it's simple now. You don't have conventional sources of finance available for thermal coal greenfield mines, especially. And whatever funding these mines are getting from private equity, for instance, it's a higher return expectations. So basically, it's high risk, high return criteria, especially for thermal coal mine. Met coal is still fine. It's not that bleak, unfortunately. So there are some good projects there too. So I can quote one. Pembroke Resources got approval recently from Queensland government, which is a good step, which was positive. No environmental agency was actually trying to target that project on carbon emissions till date, but they got approval 2 days back. So there's definitely some potential there. It's a good coking coal mine. So there are good opportunities. It's more of you have to make sure that you have identified your risks and the expectation of returns are according. That's all.
I mean, given that it's getting increasingly hard in Australia to develop new mines, does this create opportunities for places like Mongolia? We had a panel earlier this morning.
Absolutely. So in fact, Mongolian Mining Corporation, or the energy resources where he used to work, has gained a lot because of that. And there is potential for the Ardennes Tavan Tolgoi mine, definitely. There's a huge potential there. But they still can't match the exact quality that Australia provides. But if you look at Australia project profile, there are hardly some projects which can provide very good quality coking coals. But yes, there is potential for Mongolia.
Sure, and they won't be affected, obviously, by the the lack of ships caused by the
No, they have other issues like truck strikes or truck driver strike and congestion at the border. There was a 50-kilometer queue for trucks to clear the border because of geopolitical tensions between China and Mongolia. So
yeah, it's quite fun searching Google Earth for big tailbacks of trucks across Mongolia.
Yes, the big tail in Gobi Desert.
What's your take on the development of the railways in Mongolia then?
So I was talking to you about that. So there's definitely one aspect where we have seen 2 road projects awarded on a PPP basis or public-private partnership basis on a BOT route, built, operate, transfer, and they are progressing much faster as compared to rail. So rail has already been delayed by 10 years from Tavan Tolgoi to Ganki Maudu or Gashun Saket border. So the rail, once the road infrastructure comes in, It would be a toll road, but there are 3 roads connecting. There would be one additional border that will actually ease up a lot of capacity constraint. And if you look at the current capacity of Ardenes Tawan Tolgoi, Mongolian Mining Corporation, and small Tawan Tolgoi, there are 3 mines operating in Tawan Tolgoi Basin, it would be enough for them to actually supply to their capacities. So if China is willing to take all that coking coal, if China is willing to take, there would be enough infrastructure. Then why would a government invest in a rail network? I doubt they'll be quite keen, because there are a lot of other areas where they can actually invest that if they have that money.
And in the future, I mean, given that thermal coal projects are having such problems getting up and running, are you going to see more power generated from the higher quality coals?
Well, it's difficult to define quality for coal because quality may differ for different countries. For Korea, it's sulfur content. For India, it's ash, which is a larger issue. For European countries, it's carbon emissions, as simple as that. It's just coal. The efficiency of coal plant is lower than gas, and they don't like it. So it will depend on different countries. But if you look at growth countries, India, China, not so much China, or Southeast Asia, they are designing their plants to utilize Indonesian or South African coals or a little bit of Australian coals. Now, your emissions will depend on what boiler technology you are using. So if you're using high efficiency, low emissions technology, HALE technology, then your emissions actually reduces, but it's still not comparable to the combined cycle gas boiler efficiencies. Well, it's better, definitely. And in terms of their usage, they will continue to use low energy coals, but definitely the move is reducing the SOx and NOx emissions and the particulate matter so that it doesn't pollute. So at least you can't see pollution. So you would still be emitting more carbons, but you won't be able to see it in front of you. That's the aim, at least in the developing countries at the moment.
So we always say in Hong Kong, we don't like pollution we can't see. We don't trust pollution we can't see. So yeah. But anyway, does anyone have any final questions on the coal sector? If not, thank you very much. Can I have a round of applause for Pralab, please?